Meme stock mania is back in the market as retail investors pile into little loved names like Krispy Kreme and GoPro. Meanwhile, the meme darlings of yesteryear, literally Opendoor and Kohl's yesterday, are falling. Joining me now in this ever-evolving story is Tom Sosnoff, Tastylive founder and CEO. Tom, it's good to see you here. I mean, this kind of thing keeps sort of rearing its head periodically, right? And a lot of it has to do not necessarily with fundamentals for these stocks, but maybe more for high short interest where traders see an opportunity to sort of push a squeeze through. What do you make of it? And does it tell us anything about bigger picture investor psychology right now?
Well, I think it's probably, it may speak to a couple of distant red flags, but I think for the most part, I don't actually like the argument that it's a short squeeze per se, because most of these stocks, especially when you're talking about like GoPro at a buck and something, and you're talking about Open, which was $1, $2 stock at the time. Most people aren't short, $1 and $2 stocks. I mean, that would be pretty rare to have a short squeeze, on a $1 stock. I mean, Kohl's might have been a little bit different, but when you start to think about, really cheap stocks, most people cover their shorts by that time. I think it's just there's a lot of speculative money sitting on the sidelines, and it's kind of like fun. It's more of a game.
Well, and one of the things that sort of speaks to that, maybe our head of news, Miles Udland, has this vibes-related theory about the meme stocks, is that there's sort of a millennial nostalgia quality to this, right? When you talk about a Kohl's or a GoPro, for example, that maybe is feeding into this a little bit.
I think that's some of it. And this morning, we were having a discussion on Tasty this morning about it. We were talking, and I was saying, you know what? This is also the time of year, I know it's going to sound crazy, but this is also the time of year where there's no real sports to bet on, because it's really just baseball. And we're kind of in between, all the other sports. Football season hasn't started yet. So, what better place to gamble than a zero commission, zero fees, in and out of all these little penny stocks for basically no money. I think it's just a lot of, again, it's a little bit of speculative fever, and it's not from a brokerage perspective, we like it not because of the volumes, because they don't really mean anything. There's no money in this. It's more of just getting people engaged. And if it brings young people into the marketplace, it's not necessarily a bad thing. I just think it's hard to make money.
Yeah, I mean, I guess maybe somebody is making money in this stuff, right? I mean, but it's also interesting to me because that, Tom, is a little bit of a shift as well. Like in the beginning of the meme stock boom, there was a lot of sort of hand-wringing, like, these people don't know what they're getting themselves into, and they could really lose their shirts. And I feel like we've sort of evolved from that, right? Like, I think everybody knows you could lose some money. Like, it is a possibility. Or do you? Do you think that that's not still well understood?
No, I think there was a couple of factors, like a perfect storm. If you're talking about like 2020 and you're talking about GameStop, and there was a bunch of factors, and there was a lot of professionals that got involved, on the short side of GameStop, from hedge funds to market makers. And that was a very different animal back then. Now it's a little bit different. This is very similar. I mean, this is almost pure retail. And this is very similar to, just kind of like a meme crypto coin or something like that. And it's kind of just like it's a pie in the sky. It's just a cheap shot, I think, the way people are looking at it. And I wouldn't read that much into it, except when this stuff happens, the markets are usually getting a little frothy. Like a lot of the big names are kind of off the table because they've had such incredible runs and they're so expensive.
Right. I mean, it's funny also that you're not seeing a GameStop or an AMC or whatever really as much participating in this current situation. If people are going to play this stuff, if they are going to, for lack of sports gambling, if they're going to do this kind of thing, I mean, what advice would you give them as an experienced investor? If they're going to do it, what's the best way to do it or the best approach to take?
Well, I'm an experienced player because I've been around the block for a couple of four decades. But when it comes to this kind of stuff, like penny stock stuff, I'm just like everybody else. I mean, I don't have any edge. My preference, I'm mostly a derivatives trader, so I trade mostly options and futures. But when it does come to penny stocks and stuff like that, and this kind of, meme stock stuff, I actually like trading the stock more than I like trading the options. I think the option markets on a relative basis are a little wide, just given how cheap the stock are, and there's a little less edge. I think these stocks are a better pure play, and like I said, they're transaction free at virtually every firm. So, and the bid ask spread's only like a penny wide. So I think if you're going to play the game and you want to take a small shot, you just want to throw something out there and see what happens. I would do it using the underlying stock.
Do you think that any of these companies are in a position to capitalize on this? I mean, I think that AMC is probably the best example of that. I, off the top of my head, can't think of any other companies that have really done a good job of that. Do you think, though, there's opportunity here?
I mean, I think that GameStop, when you look back, when history kind of talks about all this stuff, I think GameStop is the one that was able to kind of float some stock and raise some capital and change their model and all this kind of stuff. So I think GameStop got lucky. I think these other companies, it really doesn't have much impact. It's if any one of these companies like Kohl's or any one of these other companies were to try to go out and float either convertible debt right now or stock or anything like that on any kind of an uptick, they would just slam the stock. So I don't think it changes the company. It brings some of them back into play. I mean, it's great PR if you've never heard of Opendoor
Sure.
before, if you forgot what GoPro was or something like that. I mean, the PR part of just getting your name out there, that's not bad for these companies. But I don't really think that this is not a transformational or life-changing moment for any of them.
Right. Tom, fun to talk to you about this. Thanks for joining us.
Thanks for having me.